For some historical perspective, from 2015 through late 2018, crude oil and 10-year yields traded with a strong positive correlation as crude rallied and rates moved higher. This makes sense. The economy was gathering steam. It would have positive implications for crude demand. Also, if you believe that economic booms necessarily cause some level of inflation concerns, then rates could move higher as well. Now, secondly, during the fall of 2018, crude turned lower, and several weeks later, 10-year yields joined in this move. To me, this was consistent with the earlier correlation. Growth seemed to be slowing. The assumption was that crude demand would wane and that rates could also move lower. However, at the beginning of 2019, that's when things got pretty interesting. 10-year yields moved lower throughout the entire year, and crude oil didn't follow suit. Why did this happen? One explanation could be that the lower yields were going to be sufficient in supporting the economy, and if they supported the economy, then perhaps crude oil demand would not falter very much, and that's why it kept its bid. Now we move into 2020. This correlation resumed in earnest as it was anticipated that the pandemic would completely destroy demand for crude and that rates would plummet for the same reason. Toward the fall of 2020, both crude and yields began trending higher together until rates topped out in April of 2021 and has traded lower while crude kept its bid. Now in July of 2021, and I know these are a lot of dates here, in July of 2021 the correlation resumed but to the downside. This movement was very interesting to me, as I believe many market participants assumed that the move lower in rates was mostly caused by an unwind of a short bond position and that it didn't really involve crude very much. But does all this history help us in trading crude versus 10s in the short term? Well, maybe, particularly if either asset appears to be breaking out of a significant chart pattern that suggests a strong move. Also, if the fundamental thesis you are concentrating on supports correlation, a trader could ask themselves a couple questions. One, if crude is rallying, is it because of a positive economic story or is it because of some supply disruption? Because there's a difference there. If the economic picture is rosy, will this suggest that long end rates must move higher along with crude, or is there an exogenous force, perhaps the Fed, keeping rates low? So here's what I do. First, I looked at technical analysis in both assets. If one appears to be breaking out of some sort of consolidation pattern at a tight price range and seems poised to move with some momentum, I try to balance that against a technical move in the other asset to confirm a short-term correlation. Now this applies to any two assets I'm looking at to trade as pairs.